Hey everybody, it's Harrison. Welcome back into Maine Connects. On this edition of the latest market update, I wanted to get Corey Scott on the show to talk a little bit about the state of the mortgage market. I get a lot of questions about interest rates and mortgage programs and what makes the most sense, so I thought, why not go to the expert themselves? So with that, welcome, Corey.
Hey, Harrison. Thanks for having me on. Appreciate it.
Yeah, always a pleasure to have you, Corey. So let's, why don't you quickly introduce the Corey Scott team and Harbor One?
Corey Scott. I'm a branch manager with Harbor One Mortgage. We are running offices in both Maine and Florida, doing loans all over the East Coast. So we are seeing lots and lots of crazy stuff out there right now.
Yes, crazy stuff out there. It's an interesting market, and we saw the chaos of the last few years where it was just a flurry of activity. Now a little bit of correction from that as we get things back to normal. But along those same lines, what are you seeing right now in the mortgage market, Corey? Where are rates at the moment, and what is that expectation going forward?
Yeah, I feel like the key word over the last 12 months has been volatility. And just last week alone, we saw like 150 basis point movement in rates, which for a common person, like if you don't know what that means, rates went from like high sixes to low 7.25, 7.3, 7.5 for like a perfect scenario. There's been a lot of volatility. The average rate last night, when today's August 17th, was around 7.375 across the country for A+ credit, 25% down, owner occupied. So like we're almost at multi-year highs, which is kind of scary.
Yeah, it's certainly a different environment than the 2.875, 3% we lived through for so many years.
We were spoiled for a solid 24 months.
Yeah, unprecedented low rates, and now obviously we've got to deal with the correction for that. But one of the questions I hear a lot too is, the Fed did this or the market did that, and a lot of times those things don't necessarily directly influence mortgage rates. So can you talk real briefly about what are the factors that go into pricing mortgage rates?
Yeah, I think the biggest factors that we're seeing right now, the Fed has a huge impact, right? Like we are seeing a lot of the reports coming out, like retail sales, CPI, consumer price index. The economy just isn't super stable, right? So the Fed's doing their part to try to bring CPI down, the consumer price index, which is having a huge impact on the mortgage market rates in general. But if you have any sort of like auto loans, equity lines, credit cards, those rates are like almost all time the highest we've seen in years and years and years.
Yep.
Like 3-4 years ago, we're seeing equity lines like 3.25, 2.99, right? Now it's 8.25, 8.5, 8.99. So, and also with credit cards and auto loans. So I actually saw an interesting stat the other day, kind of related to our business, but I saw that it's been the highest turn down for auto loans in the last like 20 years, in the last 6 months. Because rates are so much higher that the affordability part of it is not there for them either. So back to your original question, like all the economic indicators are what's impacting the mortgage rates. It's just a very uncertain economy right now.
Yeah, so really as the economy goes, mortgage rates follow. And when the economy's great and money's inexpensive, mortgage rates are super affordable. When the economy's a little volatile, as you said, and things aren't quite as rosy as they appear, mortgage rates go up as everybody tries to kind of stabilize and tighten.
Exactly.
But as with anything, it never lasts forever, right? So as you start to look forward, there is some guidance that there may be some relief on the horizon.
Yeah, a lot of the experts up there, they were originally predicting the quarter 3, quarter 4 of 2023 to see things start to stabilize again. A lot of the reports that have come out, especially in regards to the consumer price index, haven't checked out like they thought they were going to, I think. It's not slowing down fast enough. So now they're predicting quarter 1, quarter 2 of 2024. So that's still, 6-8 months away before we may see some relief in regards to the overall rates. Things have escalated faster than they thought they were going to in the last 2 weeks or so. I'm hoping they even back out, but all the experts are indicating, hopefully, without any other craziness going on, next quarter 1, quarter 2.
There's an expectation of some help coming, maybe a little bit further down the road than we thought. And what I always find interesting is I feel like August every year is really one of those kind of strange months that really dictates how the rest of the year goes. A lot of people are on vacation, things tend to get a little quiet. Then you tend to see people getting ready for back to school, and you see this kind of big bump in activity. And August always creates an interesting read for the rest of the year. But to your point, the economic indicators are heading the direction that the Fed and everybody wants them to. They're just not heading there fast enough. Is that fair?
Yep, exactly.
Progress, but not fast enough progress.
Exactly. And to your point, August always is like a great month to kind of set the tone for the rest of the year. And in our world, mortgage apps, like applications, are down like 80% year over year for the current time frame, just because of where the rates are currently. Like that's just a huge impact. So I feel like that's going to trend the same way over the next few months is what it looks like.
Yeah, the kind of the market just taking a breather here and waiting for things to adjust. So when a borrower calls in and goes, "Hey Corey, I'm really thinking about buying a home," what kind of advice are you giving them right now? What's that best piece of advice you're giving out?
Yeah, I would say that. I mean, the best piece of advice that we're providing is that if you can afford, first thing, where's your budget? Like, we want to be realistic with payment range, and kind of that's my first part of every conversation, but also just being realistic with rates. Like, here's where the rates are. Like, everyone's kind of in the same boat currently. If you can afford this payment and you're comfortable with that, getting a property is kind of like hitting the lottery right now. Because hopefully, with everything that's indicating rates will be coming back down the road, you have the ability to refinance. I think that as rates do come down, we're going to be kind of in the mess we were in 18 months ago, 2 years ago, where everything was going crazy over asking price. We're seeing less and less of that, I think, just based on where the rates are currently. But that's going to be another problem as rates come back down again. So securing your property now is definitely still much better than renting, right? Obviously, you're getting the tax benefits, the appreciation factor, but you got to make sure you can afford that. With the rates where they are, it can be very challenging for a lot of consumers.
Yeah, that's a great point. You've got to think about how that mortgage fits into your overall household budget, and maybe it's getting squeezed a little bit, but to your point, it is still a very good time to buy, and it's a great time to sell in terms of unlocking that equity. But it's still a very good time to buy in the sense that there's not quite as much competition. We're still seeing prices increase, but that seems to be slowing. And if you can get a home right now, the right home for you, and you can afford it, when those rates do turn in 6 months, a year and a half, whenever they get to that really nice spot again, you can refinance. And now you've actually been able to take a big bite out of your monthly cost. But it's really a matter of, does it work for you now? Can you get to that potential end goal of being able to refi and drop your cost?
Totally. And I think a big part of what we're seeing right now too is a lot of clients coming in and renting. And they're like, "Hey, Corey, our rent's going up $400 a month starting in September or October," because landlords are realizing rents are under market right now. They have been in the last few years. So they are bumping those up pretty aggressively, we're seeing. So a lot of consumers are weighing that. Like, I get a mortgage to $200 more than my rent is, but my rent's going up $400. So where does it make sense to have that budget?
Yeah, no, for sure. We've seen massive rental increases. And in many cases, the rent you're paying for that 2 or 3 bedroom is almost the same payment as a home, even in this current environment. So there's still a good argument to be made that if you are renting and your rent's going up, it's a great time to look to buy, because although that payment may be higher than your rent, it's only a little bit higher. And again, when those rates drop and you can refinance it back out, you may actually be in a far better place than if you continued renting.
Totally.
So that's a very fair point. So Corey, if somebody's thinking right now about buying a home and they want to get the process started, or at least talk to you about what that looks like, what is the best way for them to get in touch?
Yeah, I'd say give us a call. Our number is 207-400-7750, or they can shoot me a note at Corey, Corey, at harbor1.com, spelled out. Happy to do any consultation, just having a conversation, right? Like, where are you at? What are you trying to do? And just get a game plan together is the really most important part of this right now.
Yep. And what I tell people all the time is, even if you're not ready to do something right now, you should be having that kind of conversation with a mortgage person 6 months out, 9 months out. Like, you should be thinking about this process and getting ready for this process, because there's a lot of conversation you have with borrowers that also helps them get ready to buy. Yeah. What are some things they can do to help their credit score? What are some things they can do to help their budget? How do they make themselves a more competitive borrower? So it's one of those things where it's almost never too early to reach out and get the process started, because you're better to have extra time and more planning than be trying to rush to that end result.
Totally. Yeah. Just get a game plan together. Strategize, and set those wheels in motion.
Awesome. Well, I really appreciate the time today, Corey. Appreciate you coming on, sharing your knowledge. Look forward to talking to you again soon.
Thanks, Harrison. See you, man.